What's going on, guys? It's Christian from Stock Hours, and today's video, what I'm going to be talking about is a little bit different of a way to think about the stock market and day trading in general. So I'm not going to be talking about any strategies or anything like that. What I'm going to be talking about today is a concept called game theory. So game theory is something I learned from somebody who actually plays poker. So imagine it like this. So if you are dealt a royal flush, obviously that's where you want to allocate a lot of the risk. That's where you have the highest edge of winning in that hand specifically. So you're going to act based off of the hand you're given. Now, if right after that royal flush, obviously you win a lot of money, so you take the money and you sit out the next round. But the round after that, you might have got another royal flush. Now, according to game theory, you just messed up because you ruined your opportunity long term to be profitable because you skipped a very good hand. So when you incorporate that thought process into the stock market, all it's telling you is that when you have a strategy that tells you to take a certain trade because it has a high probability of success, then you have to take that trade. It brings all your emotions and all your feelings outside of everything because it goes all down to probabilities and what your system tells you to do. So it's just an alternative way of thinking about the stock market and thinking about day trading in general. So that's kind of why I wanted to talk about it today. So a couple of notes that I have written down for this video. So game theory, when your setup presents itself, you have to stick to your system to have the best numbers long term. So if you're consistently picking and choosing which trades you want to take, not due to actual factors that are going to make a difference in that setup, more just based off of emotions and feelings. So for example, oh, I'm up enough for the day, so I'm going to skip this setup. Or, oh, yesterday I had a bad performance, so I'm going to sit today out. Things like that are what deviates you away from game theory and long-term consistency and success. Because those trades that you might be skipping, yeah, you might be skipping it for a reason, but you might not be skipping it for the right reason. So if you find that you're constantly missing out on trades, skipping trades, or even taking trades due to feelings and emotions, then that's something you have to fix because long term, it's obviously not a proven successful strategy. You have to stick to what the actual system tells you to do. Again, the next note I wrote, if you skip a trade, the trade ends up being green, but you take the next trade that ends up being red. So again, this goes back into picking and choosing which setups you want to take. So the only reason you should skip a setup, take a setup, is because the factors that the market is showing you tells you this setup has a high probability of success or the setup has a high probability of failure. So if you're skipping a trade just because whatever, I'm up enough for the day, cool. You're gonna skip the next trade, whatever. Boom, the next trade's green, but you're still fine because you're green for the day. You see that you're profitable for today, come back at it tomorrow. Cool, no problem. Now let's say tomorrow you take a setup and that ends up being the red setup. You can see how by picking and choosing, due to your mental state, is going to affect your long-term probability if you're not doing it strictly based off of what your strategy and what your system tells you to do. So the next note I have written out here is relates back to chess. At first I was saying poker. Chess is also another time where game theory is very important and is going to help you win a lot more in the long term. So game theory in chess is a framework that helps chess players understand how to make optimal decisions and anticipate the opponent's move. So same thing with the stock market. Game theory is going to tell you how to make the best decision based off of the factors that you're seeing in the market. And it also helps you predict what's going to happen after you take that entry or after whatever this breakout happens, after this reversal starts to happen, whatever like that. Game theory is going to tell you what the highest probability is of whatever happening next. So when you're taking a setup, you know how to best capitalize on that setup due to what the factors are showing you in the stock market. Game theory helps you identify the probabilities of different outcomes in order to make the best decision. It tells you when to allocate risk and when to de-risk based off of the setup. So again, if you're dealt a royal flush, obviously that's going to be one of your best hands. You can't really get much better than that. Now, if you're just dealt a straight, you're going to know the risk to allocate on just a straight, straight fours or whatever versus a royal flush is going to be way different. So that's, again, just reading the market to see what the best decision is to make at the time, so that you can long term, if you keep these practices up, long term, you're going to be the most profitable you could possibly be. So this video is not really much about strategy or anything like that. It's just a different way of looking at the stock market. So let me know if you guys ever played chess, poker, anything like that, or if you know how game theory is, and if you utilize game theory while you're trading in the stock market. So let me know in the comments down below. But hopefully you guys like this video. If you do, make sure you leave a like. I'll see you guys soon. Peace.